Welcome back to Property Now, where we are on a mission to make you the property pro in your group chat. We know that the state of housing affordability in Australia is really, really tough at the moment. It has been for the past couple of years, and the trend is getting worse. And groups like first home buyers especially are really copping the brunt of it. So today we talk about just that. We address housing affordability in Australia. We speculate and dive into the government policies that have got us into this position. And we also put forward some potential solutions that predominantly the government could consider to help get us out of it. We really hope you enjoy the conversation, and we would love to hear your thoughts in the comments. So be sure to subscribe and follow Property Now for more. Well, it's good to have you back.
Funny how.
Michael.
Thank you.
Good to have you back. We missed you last week.
We're starting.
Yeah,
Sorry.
We're starting.
Oh, sorry.
Yeah, that was my very smooth segue.
No, it's done.
It's done. It's done. That's it. iPad off. Guys, today we're going to talk about housing affordability, which is a very big issue. We've spoken about it. I mean, it's pretty impossible to talk about property in Australia right now without addressing affordability in some way. But there was an article, Jace, you actually shared it on your LinkedIn in the last week or so. I think the piece itself was a little older than that, maybe came out late last year. But it was in the SMH from Alan Kohler. And it was actually an extract from a much bigger essay. But I read your LinkedIn post, found it really interesting, read the piece to dig a little deeper. The piece was titled "The Dirty Little Secret That Keeps Australian Housing Wildly Unaffordable." It spoke about a lot of different factors. There's a lot to dig into, but I guess my kind of one sentence summary of it would be talking about, the deep political roots of the issue of housing affordability, and kind of ended with, how active, serious government intervention is required to address the issue. So that's what we're going to dig into today and kind of unpack that piece a little bit, and, just kind of see where the conversation takes us, because there is a lot to dig into. I think just to sort of a good stat to maybe set the scene for the audience as well around housing affordability is that we know in 2023, according to PropTrack data, that housing affordability hit a 30-year low in Australia. So that is, kind of the context that we're living in right now. And, New South Wales, Victoria, Tassie were the worst hit states in the country. So I guess that's where we're at with housing affordability at the moment.
Congrats to the Sydney Morning Herald editor for the most clickbaitiest headline.
It's good, isn't it?
It's very good. Another stat, housing affordability wise, median prices in Sydney have just ticked to 1.6 mil over the last few days.
For a house.
For a house.
Wow.
For a house. So as always, houses outstripping apartments by a long way.
My stats were a little outdated because I read something around like 1.1, 1.2, but that was from late-ish
I dream
last
of those
year,
days.
I think.
That was amazing.
That's Sydney?
That's Sydney, yeah.
Sydney.
Yeah. Yeah, so crazy times.
Very interesting times. I mean, that's the housing affordability comment, and I think Alan is a legend in this space where he's written a lot of pieces about this in the past. And I think he mentions from the 1980s, there's just been anyone born after the 1980s, they're continuously disadvantaged to get into the property market and to achieve home ownership. I think that's the crust of it. And I know he said, the secret, but I think there was multiple secrets in there that he mentioned. He went from, immigration all the way out to, lending and how APRA have been controlling almost how banks lend money out, because that's a big factor to housing affordability, how much you can borrow. So there's some really interesting points that he's mentioned there. But, the housing affordability question, and we can see from the statistics that since the 1980s, that it's been very, very difficult for people to crack into the market and get into the property market. So I don't know if he gives a solution in there. I think it's just more about getting government to start taking action.
Or start a conversation, maybe, which there has been a few online. What do you think are some of the contributing factors to, obviously the 80s was a long time ago now. It's almost half a century ago. And a lot of things have changed in households, in markets, to bring us up to the level of housing prices that we're at. So one big one, and not so much in the 80s, but maybe more in the 70s, a lot of households went became dual income households. So things like that, you know, as humans, and I don't know if this is the direction we're going, but as humans, we spend whatever we have in our pocket. Like if I have $100, I'm going to spend it. If you give me another $100, I'm going to spend it. Like people are just like that intrinsically. Yeah. So when things happen, like households went from one income to two incomes, all of a sudden there's more money in the household. And instead of like saving that money, or, you know, people spent it. So they're like, okay, you know what? I can afford to spend more in my house. So values are pushed up because people have more money to play with. We saw it during COVID. We talk about COVID a lot on this show, but people were saving money. They had money. It drove house prices up because they were using that extra cash to outbid each other. We love outbidding each other in Australia. It's ridiculous.
Yeah.
It's ridiculous.
Well, it talks about, Alan in the piece, you know, references that in terms of like the wealth effect, and the positive and negative impacts of that. And, you know, yeah, if house prices are going up and you're a homeowner, you feel wealthier. So you might be, you know, you're going to likely spend more, but at the same time, then it kind of adds to this inequality. Whereas if you're not a homeowner, you are priced out of the market. You don't have, you know, that extra, the money to spend more on the houses that are going up.
And I think from a political sense, like the reason what Alan's touching at as well in the article is, if you're in government about to make big decisions, do you really want to hurt the property market? Do you really want to? It's
very unpopular.
Yeah, do you want to create a policy that's going to make property prices or help property prices go down? When you look at the statistics, and you know, a third of the population own their homes outright. So they don't want their property prices to go down. Like you just said, wealth effect. They feel rich. You know, they're going out and they're spending money and whatever. Yeah. You know, another third of the population are in the property market. They might be doing it tough. They may have been in there for a while, and they're getting to that. You know, they're getting to the point where they own outright. I'm in that third, right? Where, you know, a lot of my money goes to the mortgage. There's not a lot left over, but I'm there, right? And then you've got 1/3 that are trying to break in. So if only 1/3 are trying to break in, then, and everyone else wants property to maintain its value, then our government ever going to make change?
Yeah, that's exactly right, because the political decisions are always based on popularity. Yeah. Right? So Alan talks about in the article that there's been, I think, so many different studies by the government or task forces to look at housing affordability. I think it quotes like...
There's like 10.
Like every year or every second year, there is a task force looking at how to solve this problem. And he finishes the article talking about, you know, we don't need another task force, right? We need action to look at the data and the research they've already done and come up with a plan, you know, that's affordable, that can be funded by government to actually tackle this issue.
Perhaps they should get a task force to see what the hell the affordability task force has been doing.
Yeah.
Because I don't think housing has become any more affordable.
Yeah.
So that's the problem, right? And I think there's been multiple policies. I don't think there's one single policy that's said, okay, property has become unaffordable. I think you've got the capital gains tax that introduced in the 80s, where that, I think Alan mentioned that was primarily there to help people invest into their businesses.
Yeah, that's right.
And then I don't know if you know a bit any more on that capital gains side of things, but then there was the second part, which was the negative gearing, which again was to incentivize people to invest in other things other than housing, but it just led to this mass push into housing, and that's the investment class is considered housing. And then in 2016, we had Bill Shorten try to go against and wind back or completely eliminate negative gearing, and that was vastly unpopular with the voters. So I think politically it is a minefield to try and reverse some of these policies, because it has been since the 80s. And so many people have used these policies to get ahead and to generate wealth and generate income, of course. So how do you now reverse those policies when that's the voter base? And that's your constituents who are getting you into Parliament. How do you actually reverse that now? Because they're not going to vote for you again if you go against those policies.
Yeah, that's exactly right. And that's why there's that relationship between having a voice, right? So that segment of 1/3, Michael, that you're talking about, that's trying to get into the market. Alan talks about in his article the fact that they don't really have a voice or a strong representation as a minority, because business has a strong lobbying presence. The homeowners of Australia, anyone that owns property, or the other third that owns outright, that's receiving the effects of wealth creation through owning property over many decades are strongly represented. And it's clear the evidence that the policy that was voted down with Bill Shorten in 2016. So, and that's why it's clear with so many years or decades that there's no inaction. So it's pretty clear, and the evidence is clear, that doing anything to that's going to affect or reduce the price of property in this country is political suicide.
Too big to
For how long, though?
to break.
Yeah. Well,
The question is for how long?
Yeah. So I think that's the key point, because they've done enough studies around the issue, but there's just no political action to use the research and figure out what the plan is. So I think the government often uses these task forces or doing research or writing articles and papers about the problem
To look like they're doing something about
That's right. And I think Treasury or whoever's responsible in doing that research comes up with a solution, but it relies on the government to actually put it in place. So knowing is not enough. Yeah, you really have to do something about it.
And I think some of the aspirational headlines, the government coming out originally saying they wanted to build 1 million new homes. And then in the 12 months before that, there was 850,000, or in the period before that, there was 850,000 new homes built. And pre-COVID, there was over 1 million.
It was over 1 million, yeah.
So then they revised that target to be 1.2, and now it's become very apparent that not only was the 1 million not going to be hit, but the 1.2 is absolutely not going to be hit. So, you've got these aspirational targets, almost, like political headlines to win voters, these targets. To appease the public, but they're not going to be hit.
But is that government's fault? Because government's not, they're putting those targets out there. So, should they be doing that? Again, it's for votes, as you say. But government's not building these houses. Developers are building homes, right? Now, for a developer, if you take it all the way back, right? For a developer, they're businesses. They are there to make money.
It needs to be feasible. So
it's got to be feasible for them to build 1.2 million homes. And if all of a sudden they flood the market in areas and they're not able to make the margins that they're used to, then we know developers are going to hold on to that land, or they're just not going to develop that land. So is that the area where we need to look at when it comes to policy?
But they're making promises that they can't. If they're not in control of that delivery, why are you making those promises in the first place?
Then maybe it's the language. Maybe they need to be saying, we need to build 1.2 million homes. This is the areas where we can do it. Which developers are going to help? Which developers are on board? Maybe it's a matter of changing that language.
And they're doing that now. So the likes of, it used to be called NIFIC, but now it's called Housing Australia. They've been tasked by federal government to manage something called HAF, which is the Housing Australia Future Fund, which is basically, in a nutshell, it's trying to deliver social and affordable houses to get more supply into the market. It's going to be 30,000 homes roughly, which is, again, it's still a drop in the ocean, but Housing Australia is doing a fantastic job to get this up and running. And they're also in charge of the first home buyers guarantee, the lower deposits, 2% and 5%. They're in charge of administering those programs as well. So there's groups out there from government trying to get to this point. But at the end of the day, as we've both said, and as the article states, developers need to make a profit. Or not lose, right, on their projects. If they're going to lose on their projects, they're not going to get them up and running.
Developers aren't in the game to break even either.
They carry so much risk.
Yeah, they want to make
breaking
money.
Breaking even is a risk in itself.
Yeah.
There needs to be a profit margin. There is a substantial amount of risk that developers carry when getting sites delivered over usually sometimes 5 to 10 year period for these projects. So it can't be expected to have these targets and then expecting developers to deliver these projects and help housing affordability when it's not feasible to do so.
Yeah. And we were saying it even before we started recording this podcast all the way back in episode 1, that, developers, the cost of building had gone up, interest rates were going up. There's no way that developers were going to help government meet those targets, right? There was no way. We've seen so many developers that we speak to just holding on to their projects, waiting to launch, setting the launch date back 6 months, 12 months. We're seeing it everywhere. So, it goes back to that point. Government can say, we're targeting 1.2, but, how? How are we going to get that extra 1.2 million homes, I should say?
We kind of alluding to the fact that government need to do something to help developers, make it easier for them to kind of get projects off the ground? Is that the role of government, or?
My opinion on that is government plays a certain role. There's 2 points I think with what government can do. The first point is zoning and planning, making sure that they free up the ability to get your development application approved in a timely manner. It doesn't take 3, 4, 5, sometimes longer to get development applications approved for large-scale developments. I'm not talking about the 30, 40, 50 apartment project. I'm talking about large-scale developments that can sometimes take extensive period of time to get approved, whether that's pushback from community or whatnot. The second part, which has lacked in the last 20, 30, even probably 40 years, is the development of social and affordable housing, which government is directly involved and responsible for. So I think that's what now Housing Australia, via the federal government, is now tasked to do and to get up and running via the community housing providers. So I always say there's some amazing community housing providers out there getting some stock into market, whether it's rental or ownership stock into market. And I think that's where the government is leaning more into, as opposed to, they've freed up the planning side of things. Developers have been screaming for years that developments approvals take too long, so they're freeing that up. It's now on the social and affordable housing side, which government has an active role to play and a very important role to play.
Is that across the country? We know New South Wales government is freeing up DA times.
Well, we're seeing at the moment New South Wales, so you've got Chris Minns with the pattern book that we talked about. Yeah. I haven't seen anything else from the other states. But again, you hear different things in different states. I mean, sometimes we hear in Queensland that it takes 6 months to get an approval in the Gold Coast. But then you hear other times where it's taken 2 years to get an approval or longer. So it's very hit and miss. And it's also got to do with that local community and whether they want development or whether they don't want development. If Gold Coast is a primary holiday market, maybe there's not much pushback. So that is a big indication and big factor for the approval of housing as well.
Because that's kind of down to local government.
Yes.
Right, yeah. So if they're, what do you call people that live in a community? Constituents? Is that the right word? Yeah, sure. If they're not on board for, new builds, new developments. Yeah, that makes sense.
Another thing in the article that Alan spoke about was investing in infrastructure and things like that, like building roads and things like that. And I think one sort of area where we haven't really planned well is the big cities keep getting bigger geographically. So, once upon a time, Western Sydney was Leichhardt and Ashfield, whereas now it's like, Penrith and Camden, which is like 40 kilometres out from the city, right? So the Sydney keeps growing, and same things happening in Melbourne, same things are happening in Brisbane. And what's happening is that these cities are becoming unaffordable. It's where the migrants go first. The migrants go to Sydney and Melbourne because that's what they know, and that's where the people that they know have moved to as well. So those big cities keep getting bigger. Maybe we need some thinking around turning some of our smaller towns in like regional areas into bigger cities that have good infrastructure. Like if there was a fast train to Newcastle, for example, that got you from Sydney to Newcastle in an hour, you might see more people prepared to relocate. And Newcastle's a good example because it's actually a growing city. It's changed dramatically in the last few decades. Property prices have grown there as well. But because
I was going to say Newcastle is still bloody unaffordable.
It's still unaffordable, yeah. But why can't we turn the Tamworths and the Dubbos and why can't we turn... You look at the USA is a very good example. There's not just like New York and LA and Chicago, for example. You've got multiple small cities that, small by American standards, by Australian standards is actually quite large. But you can move to, Atlanta, or you can move to Boston, or you can move to Miami, and there is infrastructure, there's industry, depending on where you go. Whereas in Australia, you're very much confined to these big cities, especially on the eastern seaboard.
But how are other countries getting it right and keeping things affordable? I was talking to Mike, so one of our team members here, who just came back from China, and he went to his hometown, which when he left 22 years ago had a population of 3.5 million.
Yeah.
And he
probably
went back.
A small town back then.
Yeah, well, it's probably just a country town. He went back this year, and it's got a population of 11 million.
Yeah.
And I was asking, what's the property prices like? He said it's still affordable. People can get in. Infrastructure is great. I understand it's a very different economics there, but how are they able to get it right? Where Sydney, I think we have two of the most expensive cities in the world.
Yeah.
In Australia, globally. So how
the
does
world's second most expensive housing?
So, I mean, how are we getting it so wrong?
Is it
a
supply
series
demand?
of policies?
Is it supply demand?
Well, I don't think it's as simple as supply and demand. I think there's policies that are in place that are making it unaffordable. I mean, how are other cities getting it right? There are other cities getting it wrong as well.
Yeah.
We talk about the UK, and that's grossly unaffordable. But how are some of these other cities getting it right?
Part of it could be our aspirations as well as Australians. Like, we've got the great Australian dream to own a home, and it's always about owning a home, and renting has always been frowned upon.
Well, talking on the Chinese situation, for example, I believe there's policies stopping people from owning 35,000 properties in place.
So they come here and buy them.
And that's actually an important... Maybe. That's actually an important stat to realise, that I think there's a lot of people in Australia that think there's property investors that own hundreds of properties each. When we actually looked into that stat, and it's only Jason, I don't know if you remember that stat. How many people own more than 3 properties?
Less than 1%. It's like 0.0 something that own more than 5 properties.
Yeah,
So
most
people
investors
hoarding
own one
properties-
investment
One.
property.
That's
That's right.
right.
That's probably the norm.
So people
right.
hoarding properties, like having that's not the problem, it seems.
It's not the majority.
It's not the
by any
majority.
chance.
It
Yeah.
seems that there's obviously... So the supply question comes into mind, but then the policy side of things comes to my mind as well. So how are other locations getting it right, and how are we getting it wrong here, and not the youth? And I say youth now, but I mean, we're up to 36 as a first-home buyer age now. So it's not just the youth.
It's pretty youthful,
Yeah, it's
if you ask me.
Well,
I mean,
It depends who you ask.
depends on you. If you ask a 21-year-old, 30 is old. So, but sub 40 now are first-home buyers. So, I'm comparing it to back when it was 24, 25, 26.
yeah.
So what's some of the policies there from a lending point of view, Jace?
Well, I think lending definitely has a massive impact on demand for properties, especially investment properties. So in the article, Alan Kohler talks about APRA making changes to lending, cracking down on investor lending back in 2017. They really softened the market. So that it was very difficult to, prior to 2017, we saw clients, for example, earning the average income or whatever that is at that time. It didn't mean that you had to earn a massive salary, and they would be able to accumulate 4, 5, 6 properties, because simply that the lending allowed them to do that. And because it's like a snowball effect. So they bought their first one, they used the equity, and borrowing capacity wasn't an issue. So you know how I talk about there's usually one or the other that's an issue. It's the amount of deposit or equity you have, or it's your income and expenses for borrowing capacity. So if one's not an issue, you get to focus on just one aspect of it. You use the equity, you buy another one, and then you can buy another one because the rent from that property is able to sustain your borrowing capacity for the next one. So you just keep going without any material increase in your salary, because we all know that's pretty difficult to come by if you want to keep buying property. You're not going to get a 10%, 15% salary increase every single year. And that really caused a high demand for property investors or people buying investment properties, pricing out the owner-occupiers. So APRA cracked down on that, just to be prudent, so that one person didn't own multiple properties and borrowing at very high levels of debt. So once that happened, you saw a material change in investor demand. But since that, there hasn't been anything that significantly targeted investor demand.
So shouldn't that be helping the problem? It hasn't really, but in theory.
Well, maybe
right?
it has, but the
maybe it
problem's
has,
still
but the problem's
just...
still
It's helped the problem back then.
Yeah.
But it's certainly better. So it's certainly helped, because if that didn't happen, I think the problem today would be worse.
Wow.
Because you would have more people accumulating more investment properties, pricing out the first home buyers, the owner occupiers, and like Chris said before, keeping people in the cycle of renting. So the problem would have been much worse, I think, in my opinion. So these are the changes that can, or for example, how much deposit you need. For example, you're talking about China. From my last visit myself in October last year, I was speaking to a couple of friends of mine, and they were saying that to buy your first property, you need a 30% deposit. To buy your second property, you need like a 70% deposit.
70%.
So I think that goes back to what we talked about last week around.
So that's a pretty big barrier, right?
Correct. So that's where I think they're using policy to change people's perception around property as a wealth creation tool, or the only wealth creation tool, and more trying to influence people, align people's views that property is for shelter.
If you're liking what you're hearing so far, make sure to check us out on socials. We have been loving seeing our audience grow week on week. And one thing we've noticed is that for all of you that are listening, not a lot of you are subscribing. So make sure that you do subscribe and follow along so that you never miss an episode. It means so much to us to see our audience grow, and it helps the podcast get bigger and better each week. So thank you so much for your support. That is one of the biggest takeaways I got from that article, and something I did really want to dig into because, Alan Kohler talks about that, how in Australia, and you guys have mentioned it a couple of times too, like that property is seen as the main, wealth generator, and not this like fundamental need for housing. I think maybe as Australians we kind of get the whole affordable housing thing a little wrong. Like we don't really understand it or why it's necessary. And I guess maybe that sort of ties into as well of this, like these unpopular political opinions, because if you've got the entire population pretty much thinking that property is my way to get ahead and to generate wealth for myself and my family or whatever, then we're kind of missing the point, and maybe these politicians aren't going to pursue these more affordable housing measures. Yeah,
that's right. Because Michael, you talk about the great Australian dream of owning your own home. In my opinion, I think the great Australian dream at the moment, like version 2.0, is owning 5 investment properties and replace your income and retire 35.
Fire.
If you look
exactly
on Facebook,
right.
that's
exactly right.
How do you change generations worth of mentality? Like this has been the dream forever. It's so hard to change. You look at countries like Germany, for example, one of the greatest economies in the world. I think there were top 3 economies in the world in Germany, right? 49.1% of Germans rent long term. They rent for life, right? And they're happy to rent for life. And they know their price. They know what their monthly payments are going to be. They're happy and they live life. You know what I mean? They might invest in other things. They might live happily, but they're very secure. They've got long-term leases. This is like half the population are happy to rent. There's no great German dream of owning a home. Right?
Are they rent vesting or just no? They're not owning.
Happy to rent, or they can't afford to buy.
Well, it's not. Well, it's not as expensive as Australia. Like if Australia's second most expensive in the world, right? So they haven't put this emphasis on owning property as like the great storer of wealth and the great creator of wealth over there.
Yeah.
One of the reasons why it's so easy to rent long term over there is, on average, most homeowners, right, or most property investors manage their own rentals. In Australia, rentals are managed by real estate agents. Real estate agents need to make money. They want to turn it over. They want to look at it every 12 months. They want to make changes here. They want to charge more there. So it's the whole business of property. It's just so big, whether it's developing, selling, owning. It's just massive over here where we don't see that in other countries. This whole economy revolving around property, which is something that's very cool about Australia, to be honest with you. Our love and our passion for property, but it's taken things so far that it's just become so difficult for the next generations to buy.
I think talking on housing being shelter, if government can lift the rates that they're delivering social and affordable housing. So the difference between social and affordable, for people that don't know.
Yeah.
So affordable housing is for like key workers. There's limits to income, so caps on income. And it's usually people that can rent that property at a discounted rate. So generally 80% of the market rate. So if it's a $500 per week property, they can get that for $400 per week. Whereas social housing is people that may not be able to be employed or rely on the government for housing. For that side of things. I think it used to be called Housing Commission.
Okay.
They've rebranded, I suppose, whatever you want to call that, to social housing. So they're the different housing types. So social, affordable, and then your private dwellings. The delivery of affordable housing, I think, is a key one that government needs to really start focusing on. But then the second layer to that is, okay, people are in affordable housing, they're renting for 80% discount. How can we get these people that want to, maybe they don't want to buy, but how can we then transition these people? I think that's what's missing, is the transition from someone going to affordable housing that's renting for 2, 3, 4 years. How can we transition those people that want to buy to home ownership?
Can you explain affordable housing a bit more first, right? So I'm assuming you're talking about, nurses and teachers and things like that.
Yeah.
Key workers that need to be like every area needs hospitals
Yep.
and schools and things like that. But how do you keep them from having to move an hour away?
That's right.
Right. So if they're renting for 80%, does that other 20% come from government? Like, or how's that work?
No, so what happens when a developer wants to get a project approved? They might have 100 apartments they can get on that particular site.
Yep.
I'm not 100% familiar with what it is currently, but a couple of years back it used to be you can get an additional number of apartments, so number of dwellings.
Okay.
But then that developer needs to allocate a certain amount of apartments that they're developing in that project to an affordable housing scheme for a period of 10 years.
So the affordable housing scheme purchases those apartments from the developer.
Correct.
And then rents them to... Okay, great.
So what would happen practically is there's a project for 100 apartments, they could all be private.
Yep.
Or alternatively, there could be a different scheme that's for 120 apartments, but 40 of those, or 30 or 40 of those, get dedicated to the affordable housing scheme. The affordable housing scheme once built, so that once that project is built, those affordable housing stock usually get managed by community housing providers who then rent those properties out at 80% of market rent.
And is that good for the developer as well? Because they get 40 units sold immediately. They don't have to worry about it. Like it's...
Also, they generally don't sell them. The developer can retain that stock, or they can sell them to people that invest in those types of properties.
Interesting.
Oh, right. So you can still buy the property as an investor, but the condition is that
80%.
You don't just go pick your tenant, but you get community housing.
There's actually a restriction lodged
organisations.
on the title of that property as well. So anyone that comes to purchase, you can see that when you do a title search. You can see that restriction.
Interesting.
So that must be rented and that's for a 10-year period. But that restriction comes off after a 10-year period. That's at least what it was a couple of years back. I'm sure it's still the same way. So, they get an uplift in project, but usually those apartments sell for less because there's an associated income. And one big factor, if I was a first-time buyer that wanted to buy that property and live there, I can't. So it can only be rented out. It's only for rental stock. So, I think that's a good policy. But where's the transition for people that are wanting to transfer to home ownership? How do you transition those people?
So wouldn't the transition be, for example, say these essential workers have rented in those properties for 4 or 5 years, and then they would just enter the market like any other, for example, first home buyer, and then when they vacate, then someone else will take their place and continue to rent.
Yeah.
But the problem is, so those people that are renting those properties generally have lower incomes. So the reason why they're getting 80% rent is because they can't afford the 100% rent. So they're not actually getting any benefit they're getting a benefit of saving some money at 80%, but they're not actually saving. They still can't save.
They're not saving because the alternative for them would be to move an hour away and spend the same as what
Correct.
they're not really saving, are they? Yeah.
Well, so they can only be eligible for those properties if they have certain income levels, so below certain thresholds. So that generally means that they're in those properties because they can't afford normal market rent. So they're in that, so they can just afford the 80% rent usually. So that's a problem.
What are some policies? Because you keep mentioning what are the policies need. Like what? I'm sure you got some ideas. I'm looking to you for
There's
ideas.
definitely some ideas.
Let's talk
I'm a big
about
believer of the government needs to be looking at the social and affordable housing side of things, and I think we're seeing Housing Australia taking a very active role to do so, and it's great to see that social and affordable housing is being built. I think that's going to be something that over the last 30 years hasn't been focused on, hasn't been built, I suppose, from government. That's a key policy that needs to expand. They need to have further social, and I think particularly affordable housing. I think that's going to be a big one. And I think the next step is then, okay, you've got this 10, 20, 50,000 or even 100,000 of affordable housing stock. Rather than continuously needing to add to the number of affordable housing stock that we need, think of how we can transition people out of the affordable housing to home ownership. So then you don't need to keep building new affordable housing stock and come out of government coffers.
Does some of that come down to lending as well? Because like talking about some of those key workers, nurses, teachers, they get massive LMI benefits, don't they?
Yes, some of them do.
Yeah.
And also they get favourable treatment on variable income. Mm-hmm. So a lot of the essential or key workers have overtime or penalty rates. For example, if you're a firefighter, paramedic, nurse, so forth. So the bank's perspective is that if you're a key worker, they will take 100% of your overtime income. Whereas if you're not a key worker in those occupations, the bank will only take 80% of your overtime income.
When you say take, do you mean in
or
terms of
use that for
assessing
borrowing
your
capacity?
borrowing?
Yeah, that's right. So
Okay.
if you've earned $20,000 in the financial year of overtime, the bank will use $20,000 if you're a key worker. But if you're not, they'll only use $16,000, for example. So there are favourable policies. But in terms of the mortgage insurance waiver, they don't broadly apply to them. Some banks will have that for nurses. But at the moment, the focus on waiving mortgage insurance is still on doctors, lawyers, accountants, right, and some engineers. So it's not necessarily teachers, early childhood educators.
Typically pretty high income earners.
That's right. That's right. There are a couple of banks out there that will do something special for nurses, that will do something special for teachers, but it's not as broad as the other occupations, which I think should change. Yeah.
I think one of the key challenges from a policy point of view is how do you create good policy that doesn't just become another inflationary pressure into the market. So what I mean by that is
first-home buyer's grant.
Another first-home buyer's grant that then says, okay, I get a $20,000 discount in stamp duty. Instead of borrowing $800,000 now, I can borrow $820,000.
Yeah.
So how do you come up with good policy to stop that happening? That's another problem as well, and that's another challenge where...
That's actually incredibly scary, because what you're hearing little whispers here and there about, opening up super, which is just a minefield, right?
It's a terrible idea.
It might be great in the first month for anyone that takes advantage, but after that, you're just going to see prices go up hundreds of thousands of dollars. It's crazy.
Pause. Talk me through what you mean by opening up super, because I've missed that.
So one of the whispers is that so at the moment, super, we can't touch it until we retire.
Yeah.
Right, unless you self-manage it, et cetera, et cetera.
Yeah.
But what some of the whispers are, saying that, hey, people have, $100,000 worth of super locked away, that they're saving up each week, that's for their retirement. What if we let them use that for a home deposit?
Right.
Right. So all of a sudden, people that are saving, all of a sudden they've got access to a huge amount of cash to put towards their home deposit. Great for the first, like I said, for the first month, great, because I'm in. Yeah. I couldn't get in before, now I can get in, right? But there gets, like the first home buyer grant, amazing when they first did it, but then straight away inflates prices, and if you didn't get in early, it's just the same.
I was just going to say, I don't think people will think it's great, because I think we talked on last episode about affordability and interest rates coming down, and people thinking, I can now buy a property, but instead of having open homes from 20, they go to 30 because more people can afford.
Yeah.
If you open up super, and I'm sure they can put parameters in place, but if you open up super broadly, it's going to have a massive inflationary effect on property prices.
Yeah, huge.
So it's going to keep pushing prices up.
Absolutely.
Yeah, because people have more to play with.
That's what I said at the start. If you give me $100, I'll spend it. You give me $200, I'll spend it.
Oh, yeah.
Right. So, and I'm not saying me specifically, but people in general,
you
right?
Have a shopping problem.
That's the psych. I love my shoes. No, I don't. I haven't bought new shoes for a while. Same
still
shoes
waiting on
every
the Nike
episode.
sponsorship, by the way.
Yeah, I know.
Nike, if you listen.
But if you give people access to this stack of cash that is meant for when they retire, they're going to spend it. And that's just going to drive house prices up even more.
Well, we saw that during COVID.
I have a few friends that did it, and they regret it so much.
Yeah.
I didn't touch it.
I had friends that released it on the 29th of June,
Yeah.
and then it came to the 2nd of July, and they released another 10K.
Yeah.
So, like...
People jumped at that opportunity.
Yeah.
Like, great, I can put in that new deck
Yeah.
that I was always wanting to do.
Yeah.
Yeah.
Excellent. 10 grand.
I think I had a
No
friend
interest.
that paid for a holiday with it, honestly. Like,
People buying crypto, holidays.
Yeah.
Like,
Yeah.
I don't think it was,
Yeah. So that's already evidence. That's a pretty dangerous decision.
Yeah.
But I think all of those things like grants or this, they're short-term solutions.
Band-Aids.
They're band-aids,
Band-Aid over
but they're
open wound.
popular and they're easy.
Well, even negative
That's
gearing
so
at the
true.
time might have been unnecessary or might have been seen as very positive. And now we're at a point where you can't get rid of it and it's no longer helping. This is a policy that was created 40 years ago, no longer helping. So maybe government needs to stop these short-term Band-Aid policies and think about some long-term...
They're not incentivized. They're incentivized to do short-term solutions.
Well, yeah, they operate on
popular
short-term.
solutions.
Of course.
Right?
Exactly right.
Yeah.
So I think it's still always a supply and demand issue. Yeah. And what the government's doing to influence that, whether that's social affordable housing, whether that's fast approval times, incentives for developers, so supporting that industry that's actually building and delivering the homes.
Are there ways we can bring down the cost of building a home so that, developers can make their margin, but it doesn't have to be as expensive?
Well, I think from what Chris is saying, it's about the entire feasibility, right? So it's not always just about the cost, I think, in terms of materials, and maybe that's harder to influence because
the reality as well, and speaking openly, if costs come down, the property prices are not going to come down. That's just the reality. It's just going to mean developers' margins will become larger, and that's a free market, right? That's what it is. There's talks of modular housing that can help, where it's prefab and they build in a warehouse, deliver it to site. I mean that stuff helps in terms of the speed side of things, but does it help with cost? I don't think so. But again, I think prices where they are, if something's selling for 800,000 and it costs 700 to deliver, if that then costs 600 to deliver, but the neighbouring property is still 800,000, you can bet that the house is still going to stay at 800,000.
Right. So what can the government do, for example, to incentivise more supply into the market?
There's one key thing I think they could do, the GST side of things. So in developments, there's a roughly between 7 and 10% that developers need to pay towards GST. I think if they look at that, where if there's a short term, and it is a short term policy, but if they can say, if you build in the next 12 months or so, and it's very rough, you might be GST exempt for this particular period, and that puts 7% back into the margins of developers. Yes, it takes money out of state governments, but what's the cost of not delivering the housing?
Yeah,
I think they need to look at some drastic measures where, okay, we get this housing delivered. Yes, we lose on that 7 to 10% on GST side of things, but we actually get housing out of the ground, and you put 7% back into developers' coffers to get these projects delivered. And what I like about that is it's not a handout. They still need to get the project delivered to receive that benefit. So the outcome is government needs housing, developers need more profit margin or more margin at all to get these projects delivered. So if you give a 7 to 10%, not discount, but incentive to get projects delivered, and it could be a 6-month, 12-month, 18-month window, that can help supply get out of the ground.
It goes back to what we said earlier, right? Government says we need 1.2 million homes, and here is how we're going to get there. We're going to deliver this incentive, and developers need to do it. I can hear the listeners already saying, "Oh, great, greedy developers asking for more," but it's really not that, right? Like you said, it's a free market, right? So we need to incentivize people to build homes.
Yep.
It's as simple as that. And if we have more homes, we have more supply. We can meet, the migration levels. We can meet the stock that's required, and we won't see, theoretically, we shouldn't see drastic rises to property. I can't see prices coming down personally. Like it's just Australians love property as a key investment, as a wealth creator. And like we said at the very start, if 2/3 of the population either own their property outright or are in the property market, if prices were to crash.
I don't think, I agree with that. Yeah. I mean, I think we said it in the last episode where we've got property prices back to pre or post-pandemic highs after the drop. And that's with interest rates increasing as they did. If interest rates start coming back down, we're going to see property prices start to increase again. That's just going to happen.
Yay.
So people sitting on the sidelines are going to find it tough in 2024 and beyond to purchase properties if interest rates start coming down. It's going to make it more affordable, but unaffordable at the same time, because you'll be able to borrow more, but the property prices will be increased. So that's problematic. But I completely agree. It is a free market, and we can't expect, no one's working for free, so we can't expect developers to deliver properties for free. But we need to incentivize how they get the projects out of the ground. And if that means that there's extra margin to account for the increase in costs, then maybe that needs to be considered.
I'm interested as well, on what you were saying of house prices going up and it getting, it being harder and harder, especially for the younger generation and first home buyers to get into the market. I am interested to see, this concept of property as the biggest generator of wealth for Aussies. I wonder if that's going to look different in, 5-10 years time, obviously thinking long term, because if these young people are just feeling so disenfranchised and so priced out, they may have no option than to look for other avenues to build their wealth. And I'd be interested to see if that is going to shift.
This could be a massive unintended benefit, right? If people can't afford property, they look to something else.
Yeah.
Now, I'm personally a big believer, if you can invest, to me, the number one thing that you could invest in is a business, right? If you can invest in business, whether that's your own, someone else's, or look to build wealth via creating a business, employing people, if that means that people can't afford property and they look to create a business or create something new, it could create innovation come from it. If property is your only investment class and people just keep throwing money in there, well, what could that money have gone to then create something else, create innovation? So there could be some really unintended benefits of, hey, I can't invest in property, let's go invest in something else.
That's right. Property has always seemed like easy. You just buy a property and eventually it's safe. It's brick and mortar. Safe as houses.
Safe as houses, yeah.
Right? I can see it, I can touch it, and it doubles every.
But whatever. I'll never go visit my investment property, even though that's the case.
But so we've never like forced innovation. Because it's like, no, I'll just do this. It's easy. I'll buy a few properties. I can buy 4 in 4 minutes.
Well, it's also the parents conditioning their kids.
Yeah.
Right? The previous generation saying that this is what you should invest. Shares, ETFs,
jeez,
what are they? You know, like the share market's going to crash, but the property hasn't crashed, right? And that's even like Zaz, you saying the word rent vesting. That is purely only associated with renting and investing in property. You never get the understanding when someone says reinvesting, I'm renting and investing in shares.
In the share market, yeah, it's true.
Reinvesting is like it's been taken over by renting and property. Right? But why can't you rent and also buy ETFs?
Yeah, exactly.
Rent and buy shares.
Yeah.
It's not like you can only rent and buy property.
The other thing the article said as well was that, you know, property has always been the biggest part of the wealth conversation, but now like super is a word that's coming up more and more. So people investing in their future, making sure that by the time they can no longer work, that they're going to be able to look after themselves. So maybe we are starting to think about other avenues. And,
well, I'm certainly seeing, for example, online in some of the Facebook groups, like you mentioned, financial independence, retiring early, that people are investing into ETFs and shares and super as a way to create wealth, and it's not just property. And because some of those reasons are, it's much easier to manage. There's less paperwork. It's
lower
less
barriers
expensive.
to entry.
Exactly right. And you don't have to have a massive deposit or have borrowing capacity. You could invest.
And I think because it's liquid as well.
Exactly right.
House to sell. And
that's
to
right.
Buy and sell is a process.
And you can sell all your shares.
Correct.
Just like
and
that.
you've got these apps that's come out like Raise that you can do micro investing.
Sharesies
does, yeah. You can invest like $1.
You know, so there's a lot of flexibility around that. I think that the younger generation, whether that's because they're so discouraged from investing or buying property because it's just too hard.
ETFs is
we just love an app as well. You put anything in an app, I'll do it.
That's right. Yeah, exactly. ETFs
have made popular. Like ETFs and the simplicity of being able to purchase via an app.
Yeah,
that's right.
Has made it, because you don't have to, with an ETF, you don't have to think, okay, is this particular business going to do well?
You don't need to pick
You're
the
just
stock.
saying, you know what, I'm going to buy the top
that's the early start of innovation, right? I mean, so some of these groups like Sharesies and these other platforms that you can invest from $1. That's because people haven't had the financial capacity to probably invest in property. So they're looking at other ways to get ahead and to invest. So it's creating innovation. I think that could be a real positive that comes from it, that people look to alternate asset classes and don't just see property as the only investment class. It needs to be viewed as shelter. How can we then look at other ways to invest? And I think business and innovation is a massive one that probably, number one, hasn't been well funded by banks. They're not interested in funding that a lot. I think Judo Bank does quite well on the business investing side of things, but other banks have really focused on the mortgage side of things. But are we seeing a shift in that at the moment where banks might look to start investing and providing loans to businesses? And I think that could then help the innovation side of things and building business.
So maybe looking at government policies, maybe, you know, any policy around driving up supply is important, but maybe it's about less policies. Maybe don't worry about the short-term quick band-aid solutions, and maybe maybe government should be sort of letting property do its thing naturally, because every time government gets involved, first-time buyer grants,
they might make it worse.
They make it worse, right? So maybe it's like, let's let property evolve naturally, because it's in a pretty good position. If you own property, you're very lucky, it's great, and a lot of people still aspiring to it. You need property to live in. Everyone needs shelter. Maybe we need to be thinking about business and other policies related to
innovation.
Creating
there is
innovation.
Research and development grants out there that people can look at from the business perspective. So I think these are the sort of programs that government should perhaps look at and invest in further to incentivize people to go out there and create a business, create some innovation.
I like that idea that like it might not be the obvious answer. Like the answer to solving like housing affordability might not actually be a housing policy. Yeah. It's actually something to incentivize or encourage this innovation or, you know, other ways to generate wealth.
Might have to rebrand the show to Policy Now.
Then they can create all these great businesses, make a lot of money, and then put it into property, right?
Yeah, yeah, exactly. And then buy 10 houses. Yay.
Then you can 10 houses.
Yeah, so you can retire and be financially independent.
Yeah.
But I got to say, we need to bring the Australian dream back to owning your home.
Your home.
And not
10
owning 10 homes.
10 people's homes.
I reckon maybe the great Australian dream can be rethought. It's not just about property.
A revamp.
Yeah.
Maybe it's about creating wealth, not just through property. Maybe
safeguarding your future.
The great Australian dream is creating wealth.
Yeah.
Maybe it's not just through property. It can be through something else.
Yeah, it could be
I love
super,
it.
creating financial security. Yeah.
I'd be keen to hear what other people think about what they think the great Australian dream could morph into.
Yeah. Audience question. Let us know in the
drop
comments.
on YouTube, Facebook, wherever you're seeing this.
Yeah, please.
Spotify.
Well, TikTok. We're on the talk.
Reddit.
That was a beautiful bit to end on. I really like that, guys. I feel like we're getting in a great habit of ending on a positive. It's just happening naturally, which is great. Anything else to end on? I reckon we wrap it there.
Yeah.
That was mad.
I loved it.
That was awesome.
I loved it.
Good to have you back, Mike.
Good to be back, guys.
Yes, the squad is back together.
I miss you
again.
guys. I did enjoy listening last week. It was phenomenal. Well done.
Our number one fan.
Number
one fan of the week.
That was our best episode yet.
It was the best episode last week, that's for sure.
Until today.
Until today.
Every episode, that was the best episode.
Yeah, that was the best episode so far.
Bigger and better things every week. Thank you, guys. Thanks, The Property Now podcast offers opinions on Australian property news for informational and entertainment purposes only, and they are general in nature. It does not take into account your objectives, financial situation, or needs. It does not constitute professional advice. Always seek expert guidance before making any property-related decisions.